Greetings. You're listening to the 72nd episode of the ABF Journal Podcast. I'm Phil Neifer, Managing Editor of ABF Journal. In this episode, Trishaala, Ninan and Loren Shifrin of REV Capital joined the show to discuss the transformative year for their company, which rebranded in June and is out to Reinvent factoring. During our conversation, we discussed REV Capital's approach to the market, the strategy behind its rebrand, expectations for next year, and a lot more. Before we get to the interview, here's a word from our sponsor.
REV Capital is a leading provider of factoring and cash flow financing in North America. Our mission is to reinvent factoring. We support thousands of businesses with invoice management, credit underwriting, and collection services. By offering dedicated support and transparent access to the factoring process, we help our clients grow their operations and become leaders in their industries.
Now let's get to the interview. Hey, Trishaala and Loren, how are you both doing today?
Oh, I'm doing great, Phil. Thanks for asking.
Very good, Phil. Thanks. How are you?
I'm doing pretty well. Thank you both for being here. And for those who don't know you, can you give me a brief introduction to who you both are and also to REV Capital, the company you both work for?
Absolutely. So my name is Trishaala Ninan. I'm the marketing director here at REV Capital. I'm so excited to be a part of this team. Everyone here is fantastic. It was my first foray into the finance division, and I've been in real estate marketing and retail marketing in previous roles. So this has been a really fun and new industry for me to explore.
My name is Loren. I have been in the factoring industry for close to 15 years now, in a variety of positions across a couple of different companies. Very much enjoying being the CEO of REV Capital. REV Capital is a factoring company based out of Toronto, Canada. But we've got offices all across Canada from east to west, and 4 offices today in the US. We do a little bit of transportation, a little bit of staffing, a little bit of mixed bag, and enjoying growing in the space.
And speaking of that space, I know REV Capital, like you mentioned, is really active in factoring, and you have a pretty solid background in the industry as well. Can you tell me how you think factoring compares with other types of commercial financing?
If I had to pick one, differentiator to describe factoring as compared to most other forms of financing, it's probably flexibility, and flexibility across a whole range of features. Our product isn't a one-size-fit-all. We've got transportation companies who have one truck who are factoring with us, and we've got staffing agencies with thousands of temps across North America dealing with Fortune 500 companies that are factoring with us. We've got political research companies factoring with us, contractors in California that cut trees after forest fires. Like the product isn't really a one-size-fits-all. We're able to curtail the facilities that we create depending on the size of the client, depending on the needs of the client, depending on the industry that the client is in. And other than construction, we'll look at almost any business that's generating B2B receivables. There's also flexibility in terms of the speed with which we can fund our clients. We've got many, if not most of our clients who are receiving funding same day. And by same day, I mean within 2 to 3 hours. So invoices sent in by 3 o'clock, and by 5 o'clock, they've got money in their bank accounts. There's also flexibility in terms of how we fund and finance our clients. We've still got some who pick up checks. We've got people on real-time payments. We've got people for whom we actually take care of their payables for them. We've got clients who have us hold back funds so that they can pay their subcontractors or their carriers. Every facility is very unique, and I don't think that's something that's unique to us. I think that's something that's unique to factoring in general. Most client facilities are to some level custom tailored, which allows us and most other factoring companies to have a real wide reach. And that's not necessarily the case with many other products. A lot of products are very, very specific, and they can only be sold to companies of a certain size and at a certain stage of the business. One other form of flexibility that I think is really unique to factoring, and one of the things that makes this product so easy to sell, is flexibility in terms of scalability. We have many clients who started with us when their businesses were startups, when they had one truck, or when they had one client, or when they had one SKU. And as they scaled, the size of the facility that we provided them with also scaled. And I'm not talking about scaling once a quarter after we've done a review or a site audit. I mean, scaled as they need it. And that's one of the things that makes factoring so unique. I don't think there's any other form of financial product or financial facility that scales that quickly and that is that in sync with client needs.
And the flexibility is obviously a huge benefit of it. But Trishaala, from your perspective, why should companies choose factoring? What are some other reasons besides what Loren gave in terms of benefits?
I think back to when I first joined this industry, and I had never even heard of factoring. But once I understood what it was, I remember right away thinking, why isn't everyone doing this? And I mean that seriously. Because for me, it was, if you're a business looking to survive and thrive in your industry, you would really benefit from using this service. In my mind, invoice factoring, when done well, actually gives a business true peace of mind. You know, a lot of our clients, they start out, as Loren mentioned, as small teams of maybe 1 to 2 people, and they don't have the staff in place to manage all aspects of the business, to deal with admin, operations, accounting, collections, but we can actually offer that support. What I find is our customers come to us and they get immediate cash. That consistent cash flow is huge. It allows our clients to focus on going after more lucrative accounts and providing for their customers. That way they can do what they do best, which is focusing on their businesses, and we can take care of the rest for them. Another benefit and a feature we offer is we assess our clients' customers, who we like to call debtors, and we make sure that they're creditworthy even before our client goes into business with them. So we actually offer this service free of charge. Some factors do it differently, but we believe that our client deserves to know who they're going into business with so they can succeed. Another thing that we do all the collections for our clients. Again, when you have a small team and you don't have the in-house resources to do this kind of work, we're there to support. We have over 20 people who are just dedicated to collections. We grow when you grow. So a lot of traditional lending solutions, they have a cap on how much they're going to lend you. We grow with our client. If they need more capital, we can increase our limit and continue supporting them as they grow.
Yeah, and you mentioned that it's why isn't every company doing this? But are there specific companies or industries that are best suited for factoring? And if there are, can you tell me why?
As Loren mentioned, we have so many clients in different industries, just in our client base. But what we typically find the ideal businesses for factoring are B2B, small to medium sized, have credit-worthy debtors, have a North American customer base, and you can provide a clear audit trail. Some of the industries we find that are typically best suited for factoring are transportation, staffing, manufacturing, logistics, but it can even, scale up and, go into other industries such as wholesale, distribution, apparel, and so much more.
And then, as from your perspective, Trishaala, as Director of Marketing, how do you think REV Capital approaches factoring, and how do you then use that to differentiate it in the marketplace?
I think the best place to start is to just read our reviews on Google and Trustpilot. When I read those reviews, a common theme emerges from them. We offer outstanding and personalized customer service. When I look at our CRM team, our client relationship managers, they value our clients. They treat them like family. They love them, but they're also honest and upfront with them. We don't try to hide anything from them. We tell them things transparently, and they respect us for that. And our relationships with them have lasted because of this. We understand our clients. We know that their business is so important to them. So we're there for them all hours of the day, a weekday or a weekend. As much as we can, we're there to answer their questions and to help them. We offer something that we like to call true flexibility. So what I mean by that is a lot of our competitors we find tend to fund our clients like they may be going out of business tomorrow. But we fund our clients with the mindset that, no, they're going to survive. They're going to stay in this industry. So with that sort of mindset, when we lend them capital, we know they're going to be here tomorrow and the day after that, the day after that. That mindset flows into all that we do. We offer transparent pricing. We hate fine print. We want to be upfront. We don't want to bait our clients with a low fee and then, stick in other fees in the contract. We offer our clients same-day funding. Again, lots of factors do that. We do it without an additional cost because we know how important that consistent cash flow is for our clients. Last month, we launched an improved client portal, and that allowed our clients to, easily submit their invoices and track their status. Again, all about being transparent and being there for our clients whenever they are available and ready to check for that information. Everything that we do at our company and any of the new changes we bring about, it's all about how do we improve our clients' overall experience. So we always think that way when we work to refine our current offerings, when we begin new divisions, or if we invest in any new technology. It's all about the client, and it's all about how we can make their experience better.
Yeah, and I'm glad you brought up acquisitions because I wanted to talk about that. I know the company has brought on a litany of new businesses over the last few years, opened new offices, all sorts of things like that. Loren, as CEO of the company, what has been behind that aggressive growth strategy?
Well, it's been a very well thought out strategy. I don't know if I would call it aggressive. There's certainly other players in the market that are moving at a faster pace than us. But we're definitely trying to grow at a steady and sustainable pace. But behind every transaction, behind every acquisition, behind every new office, there was an opportunity that presented itself. And these weren't the only opportunities that we had. We've had lots of acquisitions that we've looked at that didn't quite fit, either from a culture perspective or from a book perspective or from a long-term strategy perspective. And there were many partners that we considered taking on to open up new offices, either here in Canada or in the US. And again, for whatever reason, it didn't work out. So every time an opportunity presents itself to us, we look at it with open eyes and open ears, and we assess it and we see if it makes sense. Like in 2018, when we did our first acquisition, which was an acquisition and a merger, when Revolution, now REV, bought Baron, that made perfect sense. The two companies together almost immediately became a market leader in Canada, and definitely a market leader in the transportation space. And in 2019, we didn't do anything at all. There were no new offices, there were no new acquisitions, partially because we were still figuring out what we were doing from the first acquisition, but we learned from it. And then in 2020, again, at the beginning of the pandemic, opportunity arose. We had, after chasing for years, we had the opportunity to buy Grand Financial and Royal Financial. And again, it made sense because we would increase our market share here in Canada, where we were already a large player, and it helped us solidify our position as market leader. In 2021, the three opportunities that we had, Atlantic Gateway, Growth Financial, and Grand Financial New York, allowed us to really solidify that position as market leader here in Canada and kind of get our foot in the door in New York. Because roughly around 2020, 2021, that's when we realized that there's only so much growth that we can do up here in Canada, because the market is great, but it's nowhere near the size of the US market. So a lot of what came next and a lot of what's going to come next are strategic either partnerships or acquisitions in the United States, either in territories that we really want to be in, like Texas, like California, like the Midwest, like Florida. Or with factoring companies or with partners who have proficiencies in certain industries where we want to either increase our exposure, like transportation and staffing, or in people who have proficiencies in general factoring, like the office that we opened up at the beginning of this year in New York with Mark and Den, that is Mark Dubs and Dan Stacy, has been a resounding success. The amount of growth that the two of them have been able to bring on in such a short period of time is it's exactly what we hope for when we try things out like this, like opening up new offices. And we've proven that model is, from a long-term perspective, very sustainable and a great way to allow us to increase our presence in the market and our stand as one of the leaders in factoring in North America.
And Loren, you just mentioned your company's old name, Revolution Capital. Part of the reason I asked for you to introduce yourself and the company at the beginning of this interview was that REV Capital is kind of a new brand for you all. You'll rebranded in June. Why did you decide to rebrand, and what was that process like? Trishaala, I know that was a big part of your job the last year
Oh, yes.
or so.
We're growing, and our brand was just not reflecting that growth. We were Revolution Capital. We decided to move to REV Capital, and REV Capital's mission is to reinvent factoring. Now, that's a pretty big, bold dream, but we truly believe we can lead the way. And we're going to do this through, a few areas. So first, we are constantly questioning the status quo. So that is from our operations to our brand. We're always looking, the services that we offer and even the technology we use to deliver it. We are always searching for better. We say, like, the Rev today is not going to be the same as tomorrow. We're going to be better. We look to set new industry standards, right? So we're constantly raising the bar to create change. Again, going back to that customer experience. Our goal is to make factoring one of the best financing options available to growing businesses. Based on that, we promote education. We want to transparently educate our business owners on the whole spectrum of financing. I hate jargon. I hate reading contracts full of confusing, terminology. But we hope that with our education, we can equip our small business owners, our clients, with the knowledge that they need to make the best decisions for their business. We're always looking to invest in new technology. This allows us, we can stay responsive to changing landscapes as we've seen in the past couple of years, and make the most of any new technologies to give our customers the edge they need to succeed. We're always looking to reach new markets. As we mentioned earlier, there are so many different industries that could benefit from this type of financing. So we look to see how we can fit into another business's everyday operations. And we believe in what we call frictionless funding. So why should getting paid be so difficult? The answer is it shouldn't. So we're always looking for a way to get funds to you in an easy and reliable process that works with our clients' cash flow and not against it. This is what we see as being the future of cash flow. And we're super excited to lead the way. And with our new rebrand, we're hoping we can do just that.
Yeah, of course. And of course, there's that internal excitement at your company. But what has the response to the rebrand been like in the marketplace generally?
The rebrand essentially can be broken down into two distinct elements. The first is the aesthetic, and the second is the ethos. So when you look at the aesthetic, so far, we've gotten nothing but praise. Everybody likes the new name. Everybody likes the new branding. Everybody likes the new colors. Our marketing materials are much tighter than they were before. We've gotten excellent feedback from salespeople and from new potential clients or leads that they really like the direction that the brand is going in. So, from that perspective, generally the response has been very, very strong. The second part of the rebrand was that shift in ethos and shift in mentality, best captured by our changing of our mission statement, which Trishaala touched on. So when we came up with it, we knew that it was bold, like very bold. For us to claim that we're going to be the ones who are going to reinvent factoring, a product or a service or an industry that's technically thousands of years old, or so I'm told. It's a very, that is an aggressive statement, but we're confident that we can do it. The feedback that we've gotten from our investors and from company stakeholders and employees and managers, and some vendors after the initial "you're insane" is also quite positive. Those who know what we're trying to do are very excited to see if we can pull it off. And I'm confident that we can. So I'm going to say that there's no one more excited than me to prove that reinventing factoring is not only possible, but something that we're going to be doing very, very soon.
And then Trishaala, from your perspective, obviously this has been a pretty successful rebrand from what you've seen from the marketplace and internally. But what do you think are the keys to successfully rebranding, both at REV or just in general, if you want to speak to that?
I've had the privilege of being involved at 2 previous companies where we went through a full rebranding process. And I think the key is to have a holistic view of your rebrand. So that is everything from the visual aesthetics to your content to the actual experience. So when I think about from content, we looked at the name Revolution and we moved it to REV, and it allowed us to therefore put other divisions under that umbrella. And that became sort of the name that we were known for. We are all about being transparent, as I've mentioned earlier. So we looked to use more straightforward terminology and wording to clearly explain what we do and how that can help small businesses. We looked at even our imagery. Was it being representative of our client base? And we chose specific imagery that would do that. From an experience perspective, we believe it's all about consistency. So no matter where somebody sees your brand, no matter what the touch point is, your website, your social media, an ad, a podcast, all of it, is it a consistent presence, both visually and from the messaging standpoint? Even something as simple as the way in which we answer the phone is a reflection of our rebrand. We aim to be both professional and approachable, which is all a part of our ethos. A successful rebrand is just so much more than slapping a new logo on your website. It really is about reassessing every aspect of the business and identifying ways that you can do better. And that's what we're aiming to do here. And we're just going to keep on that journey.
And then speaking of that journey, obviously, it's not like we rebranded and things are going well and we'll just stop now. So what other plans does REV Capital have for the future, both in the short term and the long term?
In the long term, obviously, global domination. But all jokes aside, short term, continued growth. There are a couple of acquisition targets and partnerships that we're, again, currently considering. So who knows, maybe there will be some announcements coming soon. Short to long term, we're really looking forward to getting RevTech, which is one of our divisions, up and off the ground. I'll play my cards close to the chest. I won't say too much, but that's definitely going to be one of the key proponents of us achieving our goal. of reinventing factoring will be the success of that particular division. Another new division that we've opened up is REV Foundation. It is going to be our charitable arm that will give back to small businesses in the communities in which we are present. We're just in the process of finalizing our foundation status for that division and kind of solidifying what the strategy is there. So that's an exciting project that we're working on. And long term, who knows? I believe that the company's future is extremely bright. I think we're going to continue to make waves where and when we can. It's an exciting journey. I'm looking forward to seeing where we go with it.
And then taking a step back from REV Capital itself, what are your expectations for the factoring industry itself in the next 6 months to a year?
I think that the coming 6 to 12 are going to be very interesting. I suspect that the players in the market who have been historically active in acquisitions will likely make a couple of more. No real surprise there. I suspect that given the rising interest rates, we'll likely see less new entrants into the market than we have in the last 2 years. That's likely. I think it'll be interesting to watch to see what happens to some larger factoring companies that specialize in transportation, to see how they decide to manage the rising interest rates, because transportation is a very special industry when it comes to factoring. I think the IFA at the last conference we had said that it was roughly 60 or 65% of all factoring volume is in that industry. And what makes that particular industry unique is that most, if not all, clients are on flat rates rather than variable rates or prime-based rates. So as factoring companies' largest expense being interest rises while flat rates remain the same, I think it'll be very interesting to watch how many factors, especially some large factors who in the last 2 years have been competing very heavily on rates. It'll be interesting to watch how they handle that. But those are the big ones, for me at least.
Yeah, no, that makes sense. Well, Loren and Trishaala, thank you both so much for joining us today. We really appreciate it.
Thank you so much for having us, Phil. We really were excited to do this, and thank you for being our host.
Phil, thank you so much. It was a lot of fun.
Thanks again to Trishaala and Loren for joining the show, and thank you for listening. It's been a little while since our last episode, so I want to remind you that our Q3 Industry Icons issue is out now. Coincidentally enough, Trishaala was one of our next-gen icons this year. You can check out her profile and the profiles of all our other 9 icons, as well as the rest of the issue at abfjournal.com. That will do it for this week. Thanks again for listening. We'll talk again soon.